Yo, what's up guys? Welcome back to another daily technical analysis video. So we're going to be looking at Bitcoin primarily, and we had a perfect retest of the range high of this range high that we've been trading in since the 8th of August. So pretty much, I mean not all month, but pretty much more than half of the month we've been trading in this range. Just up and down, up and down, up and down. And there was very good range trades to make on the 1 hour chart, which I do have drawn over here, and I will show you how to draw a range properly. But right now, looking at the higher time frame, and for a higher time frame move, we are still looking at, since this was a retest and not a confirmation breakout, because we went above there briefly, but we did not close above there. So that did not indicate any long trades to. There would be this resistance, that 65K level. That would be a perfect trade to make from right there for a breakout trade right here to there. Good trade to make with your stop loss probably above this body candle. So it'd look something like this. Breakout trade. Let's say it's like right there, and then your stop loss right above there. 5% stop loss, for a good swing trade. That's pretty valid. That goes according to one of my systems I did test. And it would be a nice little 1.1 hour trade, which would not be too bad. But that's just one resistance level and one little intermediate trade. The main trade would be all the way up to here, to the new all-time high. But we would probably find mad resistance right here. So would be another good trade. You could take partial profits right here and then trade it all the way back or up to here if it did go up to there. But then if it reversed, if it went like, reversed, and then you didn't take profits here, or it reversed right before it, and then you just close it all right here. So regardless, you're still in profits. And let me just delete this real quick. But since we did not have the breakout just yet, which it is looking like, today it might close above it, right? Because it's pretty strong. But this also could just be another false test, basically. And we're still looking for the break above here or below here to trade it to there or here, and to trade it to down here to also new all-time lows. So we're still looking at that for the long-term breakout trades. And then the 1 hour swing trade, or day trade actually, that I have going on that could play out for a short trade was in this range on the higher time frame, this massive range. This is the same range but just on the 1 hour chart. And the range confirmed as a range from this break, this long leg up to this leg down. That confirmed the range high right here, and then the range low right here. And whoops. And then this is the discount, my bad, premium zone, where you sell here and buy here and trade it in the range like that. So the entry was, since this was a false breakout into the range because it didn't confirm above it, so you shorted right here, and then you short all the way down to here, which would give you a good 3.1 hour trade. And that's what I'm going to take, because I did miss this actually. I should have entered immediately right here on where I have the line right here. But I do have a limit set to short right here, and then the stop loss right above here. And then I'll show you how to draw this. Yeah, this would be better if I had bar replay, but it is what it is. And that's not the price chart. So you take, easier if you go on the line chart to see the body closes. You mark first of all the swing high, and then the swing low, which was right here before the last leg up. And then after, once you get your Fibonacci retracement tool, you change the Fibonacci to have 1, 0.75, 0.50, negative 0.2, 0.25, and 1.25. So then you get even levels across the whole board. So after you draw the high to the low, let me just redo it. After you draw the high to the low, you take the tool and then you mark it from the high to the low. And then for a confirmed range, to confirm in a range, you need a 75% retracement, which you got right here. So once it closed below 0.25 for it going down, and if it was going up, it would close above 0.75, and that would be a 75% retracement in both directions. And then once it closes right here, you're in a confirmed range. So then you would actually technically delete all this and then redraw it. Your high, because that's still the high, right? And then your new low, which is actually right here. And then you take your tool. So after, you wouldn't have known it's a range until this point, this new low from the 25. And then you retrace, you draw the retracement again. And then you'd get your new levels of the range. And then your premium zone where it's oversold would be here. And then your discount zone where it's undersold would be there. And that is technically how you draw a confirmed range. Then you can go back to the bodies. You can delete the Fibonacci. Actually, before you delete the Fibonacci, there's one key thing actually. Oops, that's the wrong indicator. Before you delete the retracement, you mark the 0.1, the 1.2, and then the 0.25 or 0.2 negative, because it can go there and still be in a confirmed range like it did here. That was a false breakout, but it was still in this range. And then, so now you have your confirmed range, your confirmed levels, and after this point, then you'd look at false breakouts inside of it. So you could have classified this as a false breakout, went short right here with your stop above the range high, and then short into the range low. And clearly that would have been a profitable trade, and you would have made 2.2R. So you would have made 2 for the 1 you risked, essentially. And then you would have looked at here. You could have traded immediately from the false breakout right here, but you would have gotten wrecked, obviously, because it didn't go back up. So you'd wait. A good thing to have is a trading window highlighter. So if you turn this on, you would see when you're awake, because you can only trade when you're awake, right? So when you're awake, you would have made that profitable. I mean, technically, you couldn't have made that one. So you have waited for here, you would have probably gotten wrecked. And then you would have waited for this false breakout. No good trade probably this day. But this day, you could have made a... See, this would be a couple day trade, right? If you went long right here, you still wouldn't have gotten stopped out. You would have went long right here with your stop like above or below the wick, the previous wick, probably right there. And I guess technically you would have gotten stopped out all the way over there. So that would have been an unprofitable trade. And just for another reference, you would have taken this trade, another false breakout right here. Taken this trade as soon as you woke up with your stop below the wick or at the wick, and then you would have longed all the way to the high and it hit it. That would have been a good trade to take in one day. Nice day trade, perfect. And then you could have taken another one here. You couldn't have taken a short because it didn't close inside of it for a false breakout. So you couldn't have taken the short, but you could have taken this long. And put your stop, since there was no wick, basically, you put it at the range low. And then technically you'd be selling right now because it closed right inside of it, right at it. So that would have been a very good trade, 4.29. And now since we're in a false breakout, since we're in it and it looking like a false breakout, you go short right here, right at the false breakout. And this is how I got my trade. And yeah, so you short right here, stop right there because there was no previous wick. So you just put at the range high. and then you short to the range low, and that's how I'm getting this day trade, and that's how you draw a range. So it's a little mini lesson in between the video. And to take a look at Ethereum on the higher term time frame, because I don't have a range drawn, and I mean, this is definitely a good range, but a little subjective other than objective for range. So let's just take a look at the major breakout levels, which would be, this would be your target for a trade, for a breakout trade above, probably right here. You'd get some resistance along the way, but if it did break above, and confirm above, you would definitely want to trade it to the target right here, and possibly take partial profits like along here or here. So that would be valid in my opinion. And then for a breakdown trade, you trade it if we break down above. But since this is higher time frame, we have to wait a long time for these to confirm, right? And since they're also higher time frame, it's a more solid support and resistance lines that are more likely to be respected. So once we break down above it, we're most likely going to go down here, because where else would we have support other than the last 2 times we had support? I mean, we would get a little bit of support right there, but then you could take partial profits right there and then keep the rest of the trade open for right here. So that is valid. That's another valid trade for the short term. Obviously, there's more upturn. There's more upside than downside for Ethereum, since it had a lot more weakness. And Solana still have these levels drawn. So, I mean, this still remains valid, that path. But basically, we're in this very tight range where if we break above here, we're most likely going to go to here, and if we break below here, we're most likely going to go here. So that's what I'm looking at for very long-term trades. And yeah, that's basically it. I'll update you on the position because I just put a limit order to buy it. Very small, 80 contracts, $80. And yeah, that's about it. Peace out. See you guys in the next one.